Hi everybody. I hope I'm audible. So let's start with. Let's wait for 3-4 minutes. Up till that time, let's see what is your take. I mean, what is it that you expect from this particular webinar, so that accordingly I can structure this webinar. So if anybody has any views on this, please let me know. Or what concepts we must be familiar with. Okay, so here's what so I thought the way that we can structure this 1 hour webinar would be in a very simple but more effective and a powerful way. See, if you're lawyers now, most of the time when you actually be a part of financial ambit, I mean, it would be largely in terms of some sort of transaction. Okay, it will be morely transactional based. Now, I feel that there are two stages of transaction that we can take over here in this particular session. One is transaction with respect to debt and transaction with respect to equity. Okay. So to my mind, that is one area where you all will find that there will be a lot of relevance, right? And it would be a good idea that apart from legal angle, you should also know some sort of finance so that you can basically structure it very well, right? So I thought that maybe we can take this session one by one. This is that we can go through the balance sheets, P&L, what are the common points that needs to be addressed. Like for example, if I take equity, now if you say a term sheet, now it's now there are two things to it. One is that you say, I can draft a term sheet, so probably you can charge 10,000, 15,000 rupees for just drafting a term sheet and putting across clauses. But imagine if you know a bit of finance and you can actually help them and say that you know how to evaluate a projection. Okay, so what happens is that most of the time the investors do invest in tranches. Okay, so now if they do invest in tranches, you should know what milestones are being pegged to that particular tranche, and then you can actually advise them that whether this is achievable, not achievable. So now what happens is that your client is not only looking you for your legal services but also business services. Okay, now if you're giving that as a complete package to the same client with whom you would have only asked 10,000, 15,000 for just drafting a term sheet, you can actually ask him much more, because here you're giving them a complete package. So that is the importance of understanding finance. Okay, that is why it is extremely important. Okay, so I think we'll just start this discussion. Participants can keep on coming in. So, there's a recent study by Harvard Law School where they had done a detailed market research, and when they had come up with this thing where they said that, what are the most important criteria or criteria which they would want their associate to be well versed with, right? And you'll be surprised that the first and the most important criteria was less on law, but basically understanding financial statements. Okay, understanding financial statements, understanding financial market, understanding the business sense of it. Okay, so to their mind, that was something which is really aspirational, that the law firms really wanted their associates to know. So that is the importance of knowing finance. Okay, so that is so the point is very simple. It is what I have felt in my brief course with respect to these things is that while you may understand the legal terms of it and legal sections of it, but a step forward for all of you guys would be that how can you actually think out of the box as an entrepreneur, or as a to basically give business sense to your legal practice, because the more you add that is then the more value that you will actually give to a client, and that's when you will actually charge more, right? So we feel that understanding finance would actually help you sharpen your business sense about a particular client. And if you understand the business sense of a particular client, you can actually draft or you can give legal advices in a much better way. Okay, so yeah, Jagannath Cherry, you have raised hand. Okay, so I would also request that it will be great if we can have this interaction session interactive session. So please do post in your questions as and when you want to. Either you can unmute yourself and you can ask, or you can just put it on the chat, and I'll be more than happy to take it because I feel the more interactive the session is, the more you can actually take it from the session. Okay, so let's start this section. So the first section we'll do is the debt part. Okay, now what are the things a lawyer can work on in financial areas? Yes, Gulam, that's what I'm about to start with that. Okay, so I'll keep it right from the start level so that it's easy for most of you guys to understand. Okay, so you know now let's say if a client comes to you, okay, and so you know banks basically they do lend to corporate clients, okay, and there is a lot of huge market of financial consultants who basically becomes a mediator between a corporate and a bank, and basically their job is to understand the bank's requirement, accordingly work the entire project sheet and a project management and the entire template for that particular client and give it to the bank. Okay, so in that way it works a win-win situation. So the these consultant gets a huge payment from these particular clients. It even goes up to 2 lakhs, 3 lakhs, even 5 lakhs per client, depending upon the size of the this thing. So it's actually 2-3 lakhs is a small amount, is what I'm saying. I mean, it even goes up till 0.5%, 0.1% of over the overall limit amount that they charge. Now imagine if a financial consultant who just knows finance and nothing else can charge that much. So suppose if you can advise on the legal plus the financial part, imagine how much actually you can make money. Because see, what happens is that even in banks, now there's a lot of requirement on the legal plus finance angle, because even let's say if you sanction a loan, a term loan, or a working capital loan, okay, there are a lot of documents that they have to sign, okay, whether it is hypothecation document, mortgage related documents. So there's a lot of legal angle that is involved in that. Now if you are helping the client with that, along with that you are also helping him in the finance angle, imagine the kind of scope that you can actually build on, right? So we'll start off with that first, and then probably with the equity piece. So just to set the tone aside, I'll start with the basic balance sheet, financial statement, P&L, how it looks like, and what are the common problems that faces, and how you can actually catch them very easily. Okay, so let's start with that. So there are three very important points or bifurcations in a financial statement. One is a balance sheet, one is a profit and loss statement, and third is a cash flow statement. Okay, so let's start first with balance sheet. So can anybody tell me that what is a balance sheet? I mean, what do you mean by a balance sheet? Can anybody either unmute or put it in chat? I'm just asking. Do you know what is a balance sheet? What does it signify?
A balance sheet.
Yeah.
My name is Nihal, Hyderabad. Balance sheet is a snapshot of the assets and liabilities at a particular.
Yeah, Nihal, it's a snapshot of assets and liabilities. Okay, assets and liabilities of an institution is what Aneet is saying. Okay, what else? Statement of set of accounts and events. Okay, what else? Okay, so
it states the expenditure that the company has incurred or the bank has incurred, and that they have earned.
The expenditure more comes into the P&L part, but not balance sheet. Okay, I'll give in a very simple way. See, a balance sheet is basically, somebody said that the asset and liabilities, it's absolutely correct, but there is a slightly more detailed part to it. Okay, it is broadly divided into three segments. One is assets, one is liabilities, and one is share capital value. Okay, now basically the assets, what should be the balancing act? Your balancing act is your assets should be equal to the liabilities of the company plus the share capital value, okay, of that company. Now so your assets is equal to your assets of the company is equal to the liabilities of the company, okay, plus whatever the share capital value of that company is, okay, the net worth of the company we call it, okay, is what is basically the balance sheet. So if you see that first page, it basically signifies that. Okay, so your assets minus liabilities, whatever left over is basically to some extent is a net worth of the company. So these all three things should be matched. Okay, now if I little bit more classify this, assets are broadly classified into 3-4 segments. Okay, there is a fixed asset. Okay, No, fixed asset could be your land and building and all of that. Okay. So I'm just going with the basics, and then probably we'll set the stone for the common mistakes in banking, which you can catch. Then probably in mergers and acquisitions, we'll go with that. So please bear think it is like moving with the basics. It will be helpful for me to explain it further. In case if you want me to move fast, just also let me know that. Okay. So assets is basically fixed assets, which is your land and building. Then there is a movable fixed assets, which is your plant and machinery. Okay. And then there is something also called as intangible assets. Now, so that is what is called as an asset. Okay, that is the assets of the company. Current asset is basically the asset of the company that you need at an operational level on a day-to-day level. Okay, so those are called as assets. Then there is called as something called as liability. Okay, so liability will again be determined on the operational level, which is your current liability, which are your creditors. So creditors are basically the set of people with whom you have to give money, means from whom you have taken credit. So suppose you have said that, listen, I need these product and services from you, and I will pay you back in 30 days, 40 days, 50 days, 90 days, 180 days. So those become your creditors. Okay. Now, in a balance sheet, the common thing that one needs to see is what set of debtors and creditors are beyond 180 days. Okay. That is what basically banks see. So that is a common thing, because what they feel is that if a debtor is there beyond 90 days or 180 days, okay, that means it will be very difficult for them to recover that kind of money, because it is very it's very difficult that debtor will actually realize means pay money back to you, because 180 days is a huge kind of a cycle to give a credit period to somebody. So if there are debtors which are more than 180 days, or creditors which are more than 180 days, are the kind of banks basically sees what percentage of those debtors are basically higher than that. Now, why I am teaching you this? Because there is a very important concept as a lawyer that you should know. Okay. Every business has its operation cycle, so it needs some sort of cash to manage its operations, okay, which we call it as working capital. Okay, so how much money? So there are two things that they always ask as a bank, okay, or any client would ask is, or you should also know, is how much money that you need upfront to build something, and how much money that you need to basically run your course of business. Okay, so the money that you actually need to run your normal courses of business is basically the operational capital that you require. Okay, so which is basically called as a working capital. Now that working capital is nothing but whatever your current assets are minus your current. I'm just giving a very basics one. Okay, there will be some tweaking to it, but I'll leave that. But to make you guys understand, is basically whatever your current assets that you have created minus your current liabilities, whatever that gap is, that is basically your working capital gap. Okay, means that much of money that you actually require during your normal course of business. Okay. Now it is understood that if you actually go to a bank, they will ask that 25% of this gap you should fund yourself. Okay, and the 75% is what basically the bank will basically fund. Okay, now if you know this working capital concept, then you can actually recommend a client saying that, listen, boss, let's first try to calculate what is your operating money that you actually require. Okay, so from that perspective, this thing is extremely important. Okay, now when you calculate this working capital, they always see that how many debtors or creditors are beyond 180 days, because those would be difficult to realize. Okay, so that becomes either your bad debtors or your bad creditors, and they are basically excluded from this particular calculation. So imagine if your debtors are there, okay, and let's say I'm saying whatever would be your debtors, let's say they're 1,000 rupees or 10,000 rupees, just for example, and let's say 20 or 30% are beyond 180 days. So when they will actually calculate your working capital cycle, your working capital cycle is debtor minus creditor. So what they will do is उसमें से जो 20% beyond 180 days है वो कम कर देंगे. तो अगर आपके number of debtors कम होंगे तो आपका working capital gap accordingly relatively कम होगा. यानी अगर जितना कम होगा उतना कम limit आपको मिलेगा बैंक से. ठीक है. So that is why it is extremely important. There is another ratio which is very important, which banks also see in this working capital thing, is called as current ratio, which is basically your current assets by current liability. Now, what is a current asset by current liability? Means what are your immediately assets that you can actually realize versus immediately liabilities that you'll have to pay back at any given point in time. Okay, so an ideal scenario for this is 1.3, where current assets, if upon current liabilities, if that ratio is 1.3 or above, it is a good and a healthy situation. That means your assets are more, which you can realize and actually pay your liabilities back. Okay, so these are 2-3 important things that a bank sees when they actually want to move towards a working capital scenario for you. Okay. Now there's one more thing that is extremely important. So that is asset and that is a liability. Okay, there's another function called as share capital. Okay, which is a share capital plus reserve and surplus, basically the net worth of the company. Now, what is the net worth of the company? A net worth of the company is basically called as a book value of the company. Okay. Now what is a book value of the company? A book value of the company is जितना उसका शेयर कैपिटल है. अब शेयर कैपिटल क्या है? शेयर कैपिटल बहुत सिंपल सी चीज है. उसने जितने भी शेयर्स इशू किए हैं, ठीक है, मल्टीप्लाइड बाय ईच शेयर का वैल्यू, ओके, इज व्हाट इज कॉल्ड एज अ शेयर कैपिटल. ठीक है. सो व्हेन अ कंपनी एक्चुअली स्टार्ट्स, इट स्टार्ट्स विद अ शेयर कैपिटल वैल्यू ऑफ 1 लाख रुपीस, वेयर दे इशू 10,000 न्यू शेयर्स at each company ka face value at 10 rupees. So 10 into 10,000 becomes 1 lakh rupees. So whenever a company starts, it is that is what is the start of it, and then you basically build on to it as and when you feel that your share ka individual price is increasing, your share capital value. Okay, so that is the share capital plus reserve and surplus. Reserve and surplus is basically जो भी आपका लास्ट ईयर का प्रॉफिट होता है ना, वो ऐड होता है उसमें. यानी आपके पास एट एनी गिवन पॉइंट इन टाइम कितना रिजर्व जो है वो अवेलेबल है एज अ कैश that you can spend. So your last year ka profit is what basically you can add on to it. Okay, so that is what is called as a reserve and surplus. So when you want to calculate what is your net worth of the company, means what is your book value of the company, means अगर आज की डेट में मुझे अपनी कंपनी को रियलाइज करना है, ठीक है, assuming asset liability वगैरह सब हो जाए, तो बुक वैल्यू यानी कितना मेरा वो होल्ड करता है कंपनी का वर्थ, वो कैसे कैलकुलेट होता है? वो होता है उसका जो शेयर कैपिटल है जो मैंने आपको अभी बताया, प्लस उसका जो रिजर्व एंड सरप्लस है, राइट, माइनस क्वासी इक्विटी. अब क्वासी इक्विटी क्या होती है? क्वासी इक्विटी इज नथिंग बट अ लोन दैट अ डायरेक्टर हैज गिवन to the company, okay, because that's a loan and the company has to repay it back. ठीक है, तो वो उसकी बुक वैल्यू से अकॉर्डिंगली कम होगा. तो ये बेसिकली नेटवर्थ ऑफ द कंपनी होती है. ठीक है, तो जब हम बैलेंस शीट बनाते हैं तो हम ये कहते हैं कि ये जो नेटवर्थ ऑफ द कंपनी है, ठीक है, दैट प्लस जो लायबिलिटी ऑफ द कंपनी है, ठीक है, दैट शुड बी इक्विवेलेंट टू द एसेट. ठीक है, इफ इट इज नॉट देयर देन योर बैलेंस शीट इज नॉट करेक्ट, यू हैव टू रीवर्क ऑन इट, इट्स डन इन अ रॉन्ग वे. ठीक है ना. इसमें जो कॉमन चीजें जो देखी जाती हैं, एक तो मैंने आपको बताया वर्किंग कैपिटल. ठीक है, दूसरी चीज जो देखी जाती है बैलेंस शीट में विच इज एक्सट्रीमली इंपॉर्टेंट इज डेट इज टू इक्विटी रेशियो. ठीक है, what is a simple guys, if you have any question please do tell me. If it's okay, please tell me. If you think that this is boring, that also tell me, then I'll rechange this. But do let me know if this is helpful to you, if what I'm explaining, because I'm trying to explain the concept of the financial statement first, so that then we can move on to the complex one, because तब वो आपको आसानी से समझ में आएगा. Okay, now after that is basically called as debt to equity ratio. Now debt to equity ratio कोई क्यों देखता है? I mean, why would a bank see it, or why would even an investor would want to see this ratio? ये प्योरली सिर्फ बैलेंस शीट वाले हैं, अभी P&L पे हम आए नहीं. ठीक है, क्या है कि आपके जो लोन्स हैं, लायबिलिटी में आपके क्या क्या आएगा? आपका करंट लायबिलिटी आएगा, आपका शॉर्ट टर्म लोन आएगा, आपका लॉन्ग टर्म लोन आएगा, वो सारी चीजें आएंगी. ठीक है, लोन्स एंड एडवांसेस में आएगा वो. ठीक है, तो डेट टू इक्विटी रेशियो ये कहता है कि कितना अमाउंट ऑफ कैपिटल, ठीक है, जो भी आपका रेशियो आता है, ठीक है, कितना अमाउंट ऑफ कैपिटल जो है आपका, जो आपको चाहिए होता है, वो आप डेट से सर्विस कर रहे हो. ठीक है, सो सपोज डेट टू इक्विटी रेशियो, इफ डेट टू इक्विटी रेशियो इज 1:1, ठीक है, दैट मीन्स जितना आपको डेट, जितना आपका इक्विटी आपकी सर्विस कर रहा है आपका कंपनी, उतना ही आपको डेट चाहिए. ठीक है, सो दैट्स अ वेरी डेंजरस सिचुएशन. ठीक है, कि मतलब इक्विटी मींस आपका जो शेयर कैपिटल प्लस रिजर्व एंड सरप्लस है, यानी जो नेटवर्थ है एक तरीके से आपकी कंपनी का. ठीक है, जितना आपका जो ये इक्विटी है जो जस्टिफाई कर सकता है आपके ऑपरेशंस को, उतने का आपने डेट उठा रखा है, राइट. सो इट्स लाइक आपके पास कोई गुंजाइश नहीं कि कल को अगर हल्का सा भी थोड़ा सा भी इधर उधर हो गया कंपनी, आपके पास कुछ पैसा है नहीं उसको रीपे बैक करने के लिए. सो अगर डेट इज टू इक्विटी, इफ इट इज 1:1, दैट मींस इट्स अ डेंजरस सिचुएशन. ठीक है, if debt to equity is less than 1, it's a very good situation. means आपने डेट जो है कम उठा रखा हुआ है, means आपके पास और स्कोप है, आप उठा सकते हैं अगर आपको चाहिए तो, बट आपके पास और स्कोप है बिकॉज आपके पास उतना कैश पड़ा हुआ है कि आप अपने डेट को आसानी से इजीली सर्विस कर सकते हैं. ठीक है, और अगर ये एक से ज्यादा है तब तो बहुत ही डेंजरस सिचुएशन है. ठीक है। तो इस तरीके, तो ये एक रेशियो जो होता है ये लोग बहुत सीरियसली देखते हैं, बिकॉज, और ये आपके लिए भी इंपॉर्टेंट है, क्योंकि जब आप किसी क्लाइंट के पास जाएंगे और क्लाइंट को बोलेगा यार मुझे लोन लेना है, बैंक से लेना है, ठीक है, तो वो कहेगा कि अच्छा ठीक है आपको लोन लेना तो है, लेकिन आप एक बात बताइए मुझे अपना बैलेंस शीट दिखाइए। जब आप बैलेंस शीट देखेंगे और आप उसका डेट टू इक्विटी रेशियो देखेंगे और आपको लगेगा कि यार ये तो 1 या 1 से ज्यादा है, तो आप उसको बोलेंगे देखिए बैंक जो है यार थोड़ा दिक्कत करेगा आपको देने में, बिकॉज क्या है कि आपने बहुत ज्यादा आपने बहुत ज्यादा पैसा उठा रखा है लोन के फॉर्म में। फिर आप उसमें चेक करोगे अच्छा जो लोन के फॉर्म में आपने पैसा उठा रखा है वो कितना शॉर्ट टर्म में उठा रखा है और कितना लॉन्ग टर्म में उठा रखा है। लॉन्ग टर्म मींस टर्म लोन एंड ऑल ऑफ दैट, या एक्सटर्नल कमर्शियल बोरिंग, जो जनरली लैंड परचेज करने के लिए, बिल्डिंग परचेज करने के लिए, प्लांट एंड मशीनरी के लिए वो सब यूज किया जाता है, ठीक है। वर्किंग कैपिटल जो मैंने आपको बताया नॉर्मल डे टू डे वर्किंग के लिए यूज किया जाता है, तो वो आप देखोगे कितना वो है, क्योंकि और कितना वो है और किस हिसाब से, ठीक है। तो आप इस अकॉर्डिंगली जो है अपने क्लाइंट को एडवाइस कर सकते हैं कि यार लिसन आपका डेट टू इक्विटी रेशियो ज्यादा है, बैंक से मिलना थोड़ा मुश्किल है, या अगर मिल भी पाएगा तो हम कौन सा टाइप ऑफ लोन अप्लाई कर सकते हैं, ठीक है। तो इस तरीके से आप कर सकते हैं। तो ये एक रेशियो जो होता है वो बहुत इंपॉर्टेंट होता है। एक और रेशियो जो बैंक बहुत उस तरीके से देखते हैं वो होता है, अब जैसे अगर शॉर्ट टर्म लोन यानी वर्किंग कैपिटल होता है तो वो लोग जो है ये देखते हैं, मैंने आपको जो बताया वर्किंग कैपिटल गैप, और उसके हिसाब से देखते हैं। लॉन्ग टर्म में वो डीएससीआर देखते हैं, डेट सर्विस कवरेज रेशियो। अब डीएससीआर क्या होता है, इट्स अ सिंपल फॉर्मूला, इट इज बेसिकली कि आप कितना जो इंटरेस्ट सर्विस कर सकते हो, ठीक है, from your from the capital that you have. तो capital means money that you have, money means EBITDA, ठीक है। तो आपका जो अर्निंग है बिफोर योर इंटरेस्ट टैक्स, ठीक है, और डेप्रिसिएशन के जो भी जितना वैल्यू है वो कितना जो है आप आपका बेसिकली जो आपका जो लोन है, लोन का जो इंटरेस्ट अमाउंट है, ठीक है, दैट डिवाइडेड बाय दिस बेसिकली गिव्स यू अ डीएससीआर वैल्यू, ठीक है। तो आप कितना जो है उसको सर्विस कर सकते हैं बेसिकली योर डीएससीआर। ये बैंक लोग यूज करते हैं अपने टर्म लोन जस्टिफिकेशन के लिए। तो आप उसके रेशियो के हिसाब से आप बता सकते हैं कि हाँ यार हम टर्म लोन के लिए अप्लाई करना चाहिए कि नहीं करना चाहिए। Now my point is कि अब imagine if you are a lawyer and now you know all of these things. Can we get some short synopsis of this somewhere? Of course we can get this. Sir, I can't understand. Okay, I'll speak in English. I'm really sorry. Okay, I'll try my best. Sivagana. Okay, so now the point is, yes, you can get all of this snapshot. We do it from our own courses also. We have a merger and acquisition course. We are soon coming up with a banking and finance course. You can have a look at it. I'll share you the details and all of these things. Okay, so you can have all of these. So please be a bit slow while explaining each concept. Okay, I'll try to be a little more slow. Okay, so now when you are a lawyer and now you know some of these concepts, and if you actually now a client comes to you, not only are you giving him a way out in terms of the legal angle, in terms of, let's say if it's a working capital, you have to hypothecate your assets.
Sorry for
And these
interruption.
are your hypothecation documents. Sorry?
Sorry for disturbance. I have one query.
Yeah, please go ahead.
Whatever you are talking, I think this part of business mainly discussed with chartered accountants, not with lawyers, I think.
No, so here's the thought. I'll tell you why why I'm teaching you all of these things. Okay? So while most of them discuss this with chartered accountant, okay, the main point is that chartered accountant creates mainly the projections. Okay, but when it comes to legal advices, if you can not only, so my point is, what is the extra that you can actually offer to your client so that they actually can pay you a little more amount than what you are actually charging. So if you're only giving them just the legal services in terms of what are the documents that you're signing, let me just look at the legal clauses, they'll value to an X value. But if you can also give them a beyond perspective, okay, let's say in terms of debt or in terms of equity, where you say, okay, listen, I have seen your projections, okay, when I look at the tranches, when I look at these things, although you want to apply, there is a common question which a client comes, listen, I need some money, okay, what should I do? Okay, so if he comes to you with that thing, and if you can look at his financials and you can say, listen, while you say that you can take money from the bank, okay, and you are happy to pay the interest, but you do not want to give equity of your company, okay, So when you look at the financials of his statement and you see कि यार, while this guy does not want to give his equity and he's comfortable by saying what work lawyers does as a financial consultant and how we can learn them, or sort of how we can learn all those things. Would you please tell me something related with what lawyer does as financial consultant, how we can learn them, or how we can learn all those things? Yes, I'll just answer this question. So just to answer your question, so now if somebody comes to you and you say, listen, I have seen a financial statement to a broad outlay, and I feel that while you say that you can take loan from the bank, but I'm afraid that your working capital will not be suffice because you're not able to service your interest. So rather than going for a bank, I would suggest that we should go for the equity and equity investment. And therefore, in the equity investment, these are the things that we should see. Now, if you give him this solution, okay, this is the solution a chartered accountant will not give. Okay? Or if this is the solution which, if you give along with your legal services, is when he'll value you much more than actually just asking you to make contracts or just asking you to make documents. That is when you are actually moving into his business. See, the point is, how can you charge your customer more? You will have to figure out that value. So my
Yeah, I
point
got
is,
your point. Thank you.
the more you enter into the business value and give him a business solution as opposed to legal solution, is when you can actually build more. So that is the reason why I wanted you guys to explain this. Okay, would you please tell me something related with what work lawyer does as a financial consultant, and how we can learn them, or sort how we can learn all those things? Okay, there are many interesting things which a lawyer can do as a financial consultant. First, he can be an advisory into any sort of transaction. Or let's say if it's an equity transaction. Okay, now if it's an equity transaction, what happens is that most of the investors, what happens once they finalize the value, once they finalize the amount of funding that they want to do, they hardly give it in bullet payment. Bullet payments means in one shot. They try to keep it in tranches. Now, why they want to do it in tranches? Because in their best interest, they would want to lock the valuation upfront, okay, ताकि their risks are less, and they want to monitor your progress. So if they peg you with a particular tranche, their risk is less. So they will only part with some sort of value, and they want to see what is the progress that you are making. Now, if the progress is good, then they will actually give you with another subsequent set of capital with valuation actually. Okay. Now, so as a financial as a lawyer and as a financial consultant, if you are aware of this, if you can understand their projections and actually see your revenue is increasing by like 10-15%, or let's say your revenue is increasing by 15-20%. Okay, but your marketing cost, you CAC hota hai, I will explain it in some time. CAC is nothing but the money that you basically invest in marketing, which will actually help you get the number of clients converted. So let's say if your CAC is also high, so let's say if your CAC is 40% of your revenue value. Okay, so that means, and that is happening on a significant level. Okay, so that means as a financial consultant and also being a lawyer, what you can advise is that, listen sir, what is happening is that while you are increasing your revenue significantly, but you're also investing very heavily in your marketing, because your marketing CAC, which should ideally be less than 30% or 30% or 25%, is actually 40% or 45%. So my suggestion is that you are investing heavily in your marketing, and which is helping you in revenue. Now, if you actually peg that as a tranche and ask for investors for more money, I have a very sense of this thing that your valuation may dip, because investor would not want to spend at this point in business much money on marketing, but on the core business, which is your product development and your service improvement, or probably logistics. So you may find that your valuation may depend. Now, if you can understand the projection, if you can understand the revenue, if you can understand this CAC, okay, you can give this suggestion to your client. Okay, as opposed to he just asks you, okay, yaar, ek term sheet bana do, make this term sheet. We have broadly discussed on contours. These are the contours. Just write this section, copy paste, and send it across. Now, imagine if you are giving in the first scenario, if you are giving these kinds of solutions along with the legal services, what value you can actually provide to your client, because you're entering into his business. Okay, you're giving him suggestions. You're actually being now part of a deal structuring as opposed to just documentation. The more you are involved in deal structuring is when the more you can actually charge your customer. This is just one of the scenarios. That's how you can actually create, as a financial consultant, you can create a good amount of value. Okay. Now we have some set of questions. I'll just keep on answering them. It's good that we are having questions. That means you guys are really getting interested. So I think answering question is more interesting. Please be okay. So there is this question that is being raised by Kapil. This is also useful while drafting an SP and SHA. Absolutely important. Like I said, that this is one scenario where there are tranches and you have to pay money basis tranches. So if you can't understand how are the tranches being mapped, and you're just how are the tranches being mapped, then what kind of advice you can give to your particular client? Okay. And so that's one of the things. So it is extremely important, which becomes a part of a shareholders agreement. Okay. Second, also an important clause is that in a shareholders agreement there are many things apart from projection, apart from fund value. See, how does the valuation gets calculated? Okay, now a valuation is nothing but a simple terms with the number of shares that you have issued multiplied by the each value of the share. Now a value of the share is divided into two parts. One is the face value of the share, which is fairly constant, and the premium on that share. Okay, so I would say that, listen, my face value of the share is 10 rupees, but the premium on my shares is 1000 rupees. So actually the share value is so let's say face value is 100 and the premium on this is 1000 rupees. So actually my entire share value is 1100 rupees multiplied by the number of shares that I have issued. So let's say if it is I think 10,000, so it increases up to close to, I think 10,000 into 1100 is close to about 11 odd crores. So now the point is, how can you identify the premium of it? Premium part of that share, the premium quotient of that share value. That premium quotient of that share value you can only determine basis the projections that he has given. Okay? Because your valuation is actually calculated basis how much that when would this company actually move into cash positive. What is the EBITDA? EBITDA means earning before interest, depreciation, and taxation. I'll just explain what is EBITDA. But how is your EBITDA moving? When are you becoming EBITDA positive? Over a 3 years or 5 years course period, what is your EBITDA looking like that? Okay. What is your expenses moving? What are your direct expenses moving? What are your indirect expenses moving? Okay. Now, if you can read those statements, okay, you can actually, basis your understanding and assumptions, can actually come up with a premium value. Okay. So, and in that way can actually help in the valuation also. So, which all becomes part of shareholders agreement. So, if you can understand all of these things, you can actually give all of these suggestions to your client, and your client will value you much more, because you are now becoming part of business. You are now becoming part of the deal structuring. Okay. Second is, would you please tell me something related to what work? This I have answered. Is it useful? Of course. I mean, it is absolutely useful for lawyers in IBC, taxation, and corporates. In fact, for companies also, it is extremely critical. Okay. The companies which are practicing company litigation, that's also it is critical, because what happens is that you have, let's say, I'll give an example. There are 2-3 things. There is IBC, there is NCLT, there is mergers and acquisitions. All of these cases is extremely important, because see, how can you milk a cow? I always give this example. Let's say you look at the entire client scenario in which you can actually milk the cow twice. Okay? So suppose if the company is doing good, okay, and the company is doing good, the company is running its own its own capital and its own functioning and all of that, which is great. Now the company decides that, listen, I want to expand more, okay, because I feel that the revenue would that if I lock in the capital now and I can build onto it, I can actually make good amount of revenue, because my product is stabilized, my market is stabilized. I am in this business for long, so all I have to do is multiply this. So probably I need capital either to multiply it or basically expand into a different geography, and therefore I need capital. Okay, so whether you take that capital from investor or you take that money from bank, that's a separate issue. But let's say you take that capital, okay, and you invest in your business. Now, once you take that capital, sometimes it happens, or major of the time, when you take that capital, it's a huge amount of expense that you build in immediately. Okay, so right from being a cash positive company, immediately you may see that the next 6 months, 1 year, probably 1.5, 2 years, we are actually moving to a cash negative situation. This actually happens majorly in case of startups. Okay, which is okay. Investors understand this philosophy that if you are cash negative for 1.5, 2 years, which is absolutely fine, but so long as you're building onto your product. Okay, and that product is happening. So suppose you did that and the company started doing it and it gave a good revenue. Now what happens is that you milk the cow at the first stage in the time of deal structuring, where you advise the client basis his projection, basis his financial statement, that okay, this is how your deal should be. You should, the tranches you should map it in this way and not this way. The founder vesting, they have asked for 5 years. Why you want to do 5 years? Means the amount of time where your equity capital is locked for a founder, that is locked for 5 years. Do it for 3 years so that you have less. So that you are free. Suppose if you want to exit, you can exit the business. So you can give these kinds of business decisions to the to the startup or to the company, and can actually milk that cow. Okay. Now, assuming whatever projections that guy had given and that thing had happened, unfortunately the market hit and he was not able to realize this, and the company is actually not doing well. Okay, and the company actually ends up in NCLT. Okay, that's when again you can actually advise on the business by being an NCLT litigator and saying that okay, fine, I have seen his previous projection. While he had said that these things were working, it did not work out, but I know the real reason why it did not work out. But maybe these things will actually work out. So probably in an NCLT litigation value, when you want to value that company at that point in time, you can be a very good source, and people will actually appreciate you because now you have seen the end-to-end spectrum for a particular client. Okay, so you can actually milk the cow twice, and all of this can actually be possible if you actually understand his financial health. Okay, the more important, see, financial health does not mean knowing the balance sheet of the company. और knowing कि अच्छा P&L है तो P&L में ये revenue, this is the revenue, this is my direct tax, this is my salary, this is my administrative cost, this is my indirect tax, this is my marketing expense, and I have created an Excel. No, when I say financial, it does not mean by that. Financial means that what are the business decisions that you can actually come out by looking at these numbers. That is what I mean by financial analysis. And the more you can come out with business decisions and can advise your client, the more he will value. Okay, so therefore it is useful in the company stage as well. Even if at the company, many of the people say, okay, fine, if they are exporting, okay, now if they are exporting, it is always advisable if they are exporting, they can actually go for export loan, because the export loan, the rate of interest is very low, because it is pegged to LIBOR and not our Indian bank IBR. And LIBOR percentage is much lower, IBR is higher. Okay, so for export people, that is a provision that is happening. So you can actually, now if you know all of this, you can actually ask the client and saying, listen, why are you going for a term loan from the bank? You are exporting, your 80% is export, 20% is import. Why don't you go and ask for an ECB if it is if you need a 5-year or 3-year loan? And if it is not a 5-year or 3-year loan, if it is 3 months, 6 months, this thing, why don't you go to a bank and apply for a buyer's credit, which will actually cost you 3%, 4%, as opposed to a term loan, which will cost you 10%, 11%, 12%, right? And the purpose of both of them are the same, right? There he will give you in dollars, which you can realize it and you can pay it across. There he will give you in dollars, you can actually repay him in dollars, because after jo payment bhi aa raha hai, because it's an export, the client is also giving you money in dollars only, which you can park in an EFC account. EFC is nothing but foreign currency accounts which the banks are allowed, are allowed to open for corporate clients. So therefore, if you're getting money in if you're getting money in dollar, you can actually park the entire money in dollar and can use this dollar amount to basically square off your dollar loan. Okay, now in this case, you avoid foreign currency fluctuation loss, because you're technically not converting any of your dollar. You're using dollar to repay off. That interest rate of that particular loan is also relatively less. It is a win-win situation. Now, how you as a lawyer could actually, and there is a lot of paperwork that is required. So there is a lot of legal stuff that you will actually do in an ECB and all of that thing. Okay, but I am saying that while that is there, but how can you add more value to your customer? So now if you give him this business decision, he will value you more. You can charge more to your, and that is what is this session is all about. That how can you add more value to your customer, right? Now, okay. Now I have my question, sir, is, dear sir. Okay, there is another question that I have come up with. Okay, please explain the concept of EBITDA. Okay, fine. Very important financial term which many of the people use. It is being used in banks also. It is being used in investor. Ke liye this is the most important point. It is earning before interest, tax, depreciation, and amortization. So what does, in principle, nutshell, it is basically the money that you have, right? So in a profit and loss statement, it is the money that you have minus all your major expenses. Okay. So there is revenue, that is your sales that you have done. Okay. Minus there is your direct cost. The direct cost is whatever the cost that is directly involved in making your product or your services, right? So let's say if it is a manufacturing setup, so your raw material cost, your inventory cost, okay, or if it is a service, the amount that is spent on building on your service, your content, okay, your delivery, those are all directly related to your product. So that is called as a direct cost. Okay, so revenue minus your direct cost, that gives you what is called as a gross margin. Okay, now that minus your indirect cost. What are your indirect costs? Which is all other costs which are also required for the functioning of the company but are not directly related to your product. Like for example, your marketing expense, your administrative expense, your business promotion expense. Okay, these all are important. You need to incur to get sales. Okay, but it is not directly related to your product. So minus these indirect costs, whatever value that is left is basically called as an EBITDA. So it is technically a net cash that is available. Okay, so now assume if you are a company who has not taken any loan. Okay, so earning before interest, tax, depreciation, and amortization. So assume that you are a software company. So you have, let's say, you have not taken any loan, so there is no interest component. Okay, let's say depreciation. So assume you are a service company and your fixed assets are relatively very less, minuscule. So therefore, the depreciation value will be relatively less or practically negligible. So whatever your EBITDA is basically your net cash and basically the tax. So that is the cash that you have in your system. Okay. So that is the reason why people actually want to see that minus all your major expense, whatever the cash that you have in your system is basically what is called as EBITDA. I hope I was able to explain you about. Okay, now there's another question which says that, dear sir, each private limited company has own flat. Does wife have any share in private limited share of the husband and concurrently share of the flat which each private limited company? Okay, yes sir, each private company has owned one flat. Does wife have any share in the private limited share of the husband and concurrently the share of the flat which private limited company owns? So I'm just trying to understand your question better. You are saying that there is a company which has owned a particular flat. It's a husband and wife are the shareholders of the company. So while they have owned the flat, do they also become the owner of that particular flat? If this is the question, then I'm assuming if this is the question. If not, then please let me know if there's different. Now, if this is the question, then you don't become the owner of the flat. It is basically the company's asset. So suppose if it goes into the realization, you will not have any charge on the company. You will not have any charge on the flat. It would be the company's asset. So if suppose the company goes into a bifur and your asset needs to be realized, that flat will also be realized, and whatever the proceeds that will come from that flat would actually be utilized to pay off the outstandings, whether it is bank loan, whether it is your debtors or any other. Okay, I hope I have made myself clear. If there is any change, do let me know. There is another question. My question, sir, is that where many years prior to marriage, even from 32 was filed, wife entitled to any portion of shares held in the family business or private limited companies from many years prior to the marriage of the husband. My question, sir, is wife entitled to any portion of the shares held in family businesses, private limited companies from many years to the marriage husband? See, shares in the private limited were given many years prior to marriage, even before Form 32 was filed. 3 years from all companies, many years prior to marriage. Each private limited has own one flat, and does wife have any? So the flat will not be of your wife, okay, but she's a director in the, if she becomes a shareholder and a director in the company, that's a different thing. So there are two different things. Asset will belong to the company, okay. Second is that even if it is even before form 32, but if the shares are given to her, even in the physical form, see what happens is that she would be a shareholder in the company, and I'll tell you why. So even before Form 32 or the dematerialized share, there were physical shares that were being issued. But the point is that every share has a unique value. Okay, the share, a share number, okay, which is unique to a company. Okay, so you cannot replicate your share number. So suppose if she has been issued a share, whether it is in the physical form or in the dematerialized form, it will have a share number, and therefore by virtue of that fact, she will be the shareholder of the company, okay, because that share would actually be still valid even if it is in the physical form. She can get it dematerialized, that's a different thing, but physical shares are also acceptable. Okay, sir, how is accounts useful for an in-house counsel of a company? Oh, absolutely, this is a very good question, and I'll answer that. I think accounts are extremely important, even for an in-house counsel for a company, because let's say imagine a situation where you are an in-house counsel, and see, more importantly, when you are when you are in a company, why would somebody value you more when you actually perform beyond than what is expected from you? Okay, now when you are running a company, you have to make a lot of business decisions. Okay, so suppose if apart from legal, you also help them in giving business decisions, then to my mind, you are bringing much more value to you, much more value. Now let's say, for example, one is the financial part. Let me give a very bleak this thing between this thing. So let's say your MD of your MD of your company says, and he comes to you and he says that, listen, what happens is that I want to acquire, I want to have a new talent on board, and it is getting very expensive these days because people are charging a bomb. Now, how should I do it? Because how should I do it? You tell me. Now, if you know the cash flow of the company, okay, and if you know, okay, generally what is the profit that we are making, okay, what is the profit that we are making, what is the cash reserve that we have. Now basis that, if you recommend him and you say that, sir, listen, what we can do is that rather than giving a very fixed rather than giving a very high fixed salary, what if we can do a fixed plus variable component, but the variable component we can give him in the form of ESOPs. Okay, so we can say this could be your fixed component, and I am able to understand that we are in a position to give you these fixed components because our company cash flow is that much. Okay, so if you understand the cash flow of the company, you actually know how much of the cash that the company currently has. Now if basis that you say, okay, this is the amount of fixed component that you can give, okay, and this much percentages I would want to give him as ESOP, means employee stock options, means the shares of the company, but I will not give him upfront. I will give him at a staggered pace. Okay, so I will lock in that ESOP. So every 1 year I will unlock 20% of that. So I will commit, let's say I'll give you 100 shares, but I will not give you 100 shares today. What I will tell you that you stay with me for 1 year. If you stay, 20% of it gets unlocked. So you will get 20 shares at the face value. Next year you say that I'll give you 30% unlock. So like that, he has to stay the entire 3-4 years with you to get the entire shares with you. Now what will happen is that now you have given him a suggestion where uh, 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 where uh, where for the employer it is good because the fixed component is not high. Okay, and you have given a solution where the fixed component is not high, but it is a solution which their respective employee who would want to join would actually join, because the shares of the company are extremely important, especially if it's a growing company. Because what will happen is when the company would want to get listed, or think that all of the investors hit because it's an easy acquisition. Okay, if you actually because see, those are all employees. So if you give them a good set of money or show them good set of, those are the ones which are very high chances of easily getting converted. Converting means paying off. Okay, so so therefore for these kind of employees, it is also saying, okay, fine, let me do an ESOP because I have reviewed the company is good. If today, not tomorrow, I'll actually make a good set of money. So let me take that risk. Let me take that part. Now you were able to give him this kind of a suggestion because you knew finance, you know how ESOP works, you know how the structure works, you know how you could pay, you were aware of the cash flow of the situation of the company. Your MD will get super impressed. He will not expect such kind of answers, but if you give him such kind of answers, means you are actually helping him make business decisions. When you help them make business decisions, is when he'll actually value, right? So I've just so Johnson, I've tried to explain you that with an example. I hope that answers your question. Okay. Divorce case, wife, is it purely simple? Money interim maintenance. Okay. I have got a question from Kapil. What is equity infusion? Whether is it in terms of money or shares? Example, some people say our company has infused XYZ equity. Does it mean INR or equity shares? Okay, that's a very interesting question. I'll answer that. See, what happens is, infusing means, in a simple way, let's say you have launched a company. There are 10,000 shares. Each share is of 10 rupees value. So your share capital is 1 lakh. Okay. Now let's say you have started building the company. The company grows. It does wonderfully well and all of that. And you want to bring investors on board. Now, when you want to bring investors on board, what happens is that you issue new shares. It is not that of those 10,000 shares, you say, okay, I give you 1,000 shares and 99 or 9,900 is there with me. Okay. Generally, what happens is that you issue new shares, so your denominator gets reduced. So you say, okay, fine, I am issuing, I have run past the board, I have got an approval, and I am issuing 1,000 new shares at this particular value. Okay. And therefore my denominator has been increased, and therefore when I do the shareholding capital, so let's say if you had 5,000 shares, if let's say you and probably your wife each hold 5,000 shares each, and total shares are 10,000, so that means you have 50% shareholding. Now another investor comes in, okay, and he says, okay, listen, I want to invest, but I need 1/3 of the company. So what will happen is, you will not give 2,500 of yours and 2,500 of yours and will give 5,000 to him. What you will actually do is, you will actually increase the value, you will increase the number of shares to 5,000 more. So therefore 5,000 more and give that 5,000 to him. So basically now what will happen is that your shareholding would be 5,000 divided by 15,000. Your wife's would be 5,000 by 15,000, and his would be 5,000 by 15,000. So everybody will get 33%. But this is what you meant by equity infusion. So this is equity infusion, right? Kapil, I hope this answers your question. Okay. Is there any other question? Yeah, we have. Yes. Okay. Okay. Great. So I think if there is any, please keep on asking me questions. But what I can do is, probably I'm not able to understand your question in detail. Probably I'll just give you my number. After this, you can actually call me and I can have a one-on-one with you on that. Okay. Now, how is taxation a part of finance? I mean, definitely it is a part of finance, because what is taxation? I mean, if you look at it from corporate point of view or any point of view, whatever the net profitability that you are left with, okay, that is basically your taxable income. Now in corporate it is 25% now, and 15% if it is a manufacturing facility after the new bill. Okay, so but if you are aware of what are your net profitability, you would know how much tax you have to pay. Okay. Now what happens is that many companies, what they do is, they during the time of January or February, they try to understand that what would their closing year would be and what would be their net profitability, because they prefer that it's better that I can pay off to some investors, to some of my vendors, or to some of my vendors in advance and all, because I have to in any which way take their services. So it's better that if I have to pay him in April or May, I can pay him upfront. So what will happen is that I'll book my expenses, but it will also help me in doing my business. Okay. So now, if you now as a business, if you are aware of what would be your net profitability indicatively, you can book those expenses in February or in March, which would actually help you reduce your net profitability. And if it helps you reduce your net profitability, the amount of tax that you would pay would actually be less than what when in the normal course of business it would have happened. But how will you come to know all of this? Till the time you don't read the financial statement of the company, you won't be able to understand. And as a lawyer, if you give him this kind of suggestion, he'll value you more, right? So, right. I hope that answers your question. I hope that answers your question, Gautam. Sorry, Gulam. Now the next question that we have is, what are the Sir, can you suggest some good books to understand the basics of finance? See, I mean, there are a lot of good books on management and accounting. In fact, we are coming up with a course on finance, on banking and finance. We have a full-fledged course on mergers and acquisitions, and in fact, in Companies Act, which has flavors of all of them. Probably, if you want to see, you can check out our website to see what all details that are there available, right? You can have a look at it, and if you check our website, we have in detail explained a lot of things in terms of finance, in terms of what all exercises that we would be doing and all of that. You can actually refer that also. So have a look. I think that will help you, right? Now, sir, can you understand some, okay, what are the specific subjects in finance that you would want a lawyer to know as the scope of finance is huge? Can you please guide me what to start off with while studying finance? Try to understand, first of all, the P&L of the company. If you understand the P&L of the company, how it is calculated, what is the logic behind doing a P&L of the company, the way I have explained you, then you can understand how to create a projections of the company. Or at least if a CA is doing a projection, I'm not saying that you have to do the projection, but if somebody is doing a projection, you can actually understand that projection and make business insights out of it. So if I would have been you, I would have started by that logic. Okay, what is a direct expense? What is an indirect expense? How does this compute that? Oh, how is it net? What is? How does revenue keeps on moving? What are the concepts of assets, all of that. So I would suggest that you should start with that first, because that will then help you move into a sequential manner. That is if you want to do the banking. I think if you understand the projections well, now I'm not saying you have to make projections, but if you understand the projections well, you can be to understand how a P&L is calculated and what are the various issues that come across. So to my mind, one is that you should know how a P&L is calculated, but what are the various goof-ups that people do? Okay, that is very important. Like for example, I had a banking experience. There was one of my clients. When we were doing the projection, everything was doing wonderful, but then we figured out that this guy, what he's doing is he's taking short-term loan from us and he's using it for his long-term capital. Means he's taking short-term funding from her, let's say working capital finance, and funding, and he's actually using it in long-term this thing of buying a land or buying a building or doing a plant and machinery and all of that. Now that is ethically absolutely completely wrong. Okay, you can't do that. Okay, because both of them will actually, I mean, that means the capital that I have given you to run your business, basis the understanding, you're actually using it to build some sort of an asset, which I don't know when it will realize. So there will be a point when there will be a swing. You will not be in a position to run your business smoothly. And technically, I've given you the money to run your business smoothly, right? But how could I understand that this was a goof up that had happened by using projections? So it is also more important to understand what are the scenarios of these goof up, because the more you understand that, the more you will come up with a solution and the more you will actually be more analytical about it. So that is the end objective. Okay. Do you recommend any specific course, which I have already told you? We have a financial statement course also, which is the starting course also. You can even have a look at that. That's also great. Then, okay. So what are the questions that we are having now? Okay. Real life scenario. I'm presently going through a divorce and my lawyers and opponents are all hard. Okay. So wait. Sir, how finance plays a role in mergers and acquisition? Oh, I think the entire merger and acquisition is completely dependent on finance, I would say. Okay, because see, a merger and acquisition is largely divided into four parts. Okay, the job opportunity or the job this thing. First is deal structuring. Okay. Second is basically due diligence. Okay. Third is documentation, and fourth is post disbursement monitoring. Okay. Now, to my mind, uh, while as a lawyer you would majorly be involved in documentation part or probably to some extent due diligence part, because they do financial due diligence as well as legal due diligence, but that does not have much money. But if somehow you can actually be part of these structuring, that's when you will actually make a huge amount of money and you can charge a bomb to a client. Okay. And that destructuring part you can actually be involved in. Okay. If you know finance, because if you know finance, you could actually give him those business suggestions that would at the end of the day transpire into a term sheet which you will only make. And once the negotiation actually happens and closed down, it will transpire into a shareholders agreement, which also you will only make. Now, in that shareholder agreement, you will only shareholder agreement, there will be payment that will be basis on those tranches, which you would have given him some suggestions to do that. And therefore, if he is able to do that, you will be able to monitor that. So now, instead of you just doing a term sheet or just a shareholder agreement, you are involved in end-to-end spectrum of mergers and acquisition. And why you were able to do that? Because you were able to give him business decisions. Why? How did you able to give him business decisions? Because you actually analyzed his projections well. Right, so it is completely dependent upon you how much work you can take from a client, how much can you milk a single client. Okay, the more you up your value chain in terms of offering to the customer, the more you can actually charge a premium to the customer. Right. I hope that answers your question, Gulam. Okay, great. So I think we may want to wrap this session in next 3, 4, 5 minutes. But let me first give you my numbers. So the whole idea of this session was, so this was not a very detailed one, but I wanted to give a broad outlay of what is the importance of finance for lawyers and why you should actually focus on it. And finance does not mean just the Excel, that there is some numbers that is put in the Excel. For me, as a lawyer, if I would have been a lawyer, for me it is more important that what kind of business decisions I can give to my customer basis those numbers, what he will value me and for which I can actually pay premium. Okay. Now I would love to hear your suggestions and I would love to take all of your queries on a one-on-one basis. Let me give you my mobile number. It is 9953141060. I'll again repeat 9953141060. Okay, and my email ID is Siddhant, SIDDHANT @lawsikho.in. Okay, so please ask me all your questions. I'll be more than happy to answer them on a one-on-one level. Please do call me. Please email me. If you want to check, I mean, we have also come up with a lot of components in the finance side. You can have a look. We have a financial statement ka course, we have mergers and acquisition ka course, we have we are soon coming up with banking and finance ka course in next 10-15 days. Okay, you can have a look at it and see in detail that if you that how it values you. Right now, is there any double nine 9953141060? 9953141060 is my number, and my email ID is okay. I'll not do privately. I'll just do it to everyone. So this is my number. Just a minute. 9953141060, and my email ID is Siddhant @lawsikho.in. Okay. Now I need a help. Please tell me whether this was useful to you in either yes or no, and if there is a rating scale of 1 to 10, with 10 being the best and 1 being the worst, what would the rating that you would want to give me? If you can just let me know, that would be really helpful. And Probably some of you can actually unmute yourself or can put in the chat in terms of what are the things that you actually liked about this session. That will actually help you better myself further. Okay, okay, great session, 10 on 10, 10 on 10. Okay, okay, okay. Need a follow-up session, definitely, Gulam. We would definitely come up with a follow-up sessions. Examples were really good. Thank you. What else did you guys like about this session? Is there any area of improvement? If you can let me know.
It was a great session, Siddharth. And you know, lawyers are somehow not very comfortable with the finance part, and somehow the chartered accountants are taking away all the work from the lawyers.
Yep.
So you are doing a great job, helping people, and guiding them on the finance part of it. Great work. Keep it going. Thanks.
Thank you. Thank you, Sharad. Thanks for that. Anybody else who would want to say anything? More sessions, please. Definitely, I'll come up with more sessions. But I hope you guys. I mean, the whole idea of this session was to make you guys realize and feel that finance is actually not a very alienating concept, but it's very, very interesting. And if you actually imbibe it, it will actually help you in a long, long way as a lawyer, I feel, because you will up the value chain. And the more you up the value chain is the more you can actually bill to a client. On taxation law too. Okay, definitely we'll try to do that. Okay, guys, thank you so much. Okay, Nihal said you could have started with 4 stages of M&A and restricted the 60 minutes to 4 examples. You gave great examples regarding loan misuse, ESOP for salary negotiation, taxation. Okay, so the M&A was just a part of it. I thought that probably we can do with debt first and equity later, but maybe okay, fine, equity would have been the starting point. Maybe I can take care of it next time. Thank you, Nihal, for your candid feedback. I think that was more interesting for you guys to understand the equity part more than the debt. So I'll take that as a good feedback. Okay, guys, thank you so much. Again, I've given you my details. Please do feel free to contact us. And please do feel free to contact me. I'll be more than happy to help you guys. Thank you so much for giving me your time. Thanks.